Well, as promised, let's get chatting with the management of Dr. Lal PathLabs. Well, the numbers are fairly good. Quarter one was an operational better quarter for the company. For FY25, they've given us broad guidance, but let's see whether or not they want to tinker with that one. We have with us Mr. Manchanda, the MD at Dr. Lal PathLabs, who joins us. Hi, sir. Good morning. Always good to see you in. Well, the last time around, you had hinted that price hikes was not something that you're really looking at, but volume growth in the vicinity of around 6 to 7% is what you were guiding for. Do you believe that, post the start of the first quarter and we are almost halfway through the second quarter, do you think you can see double-digit volume growth for this year? And what about margins? You've done a little bit better than the guided 27%. You want to up that as well?
Yeah, I think first is about price increase. We had said that we will not take price increase. Our stand still continues the same. And despite that, we have delivered numbers which are better than last year. So our confidence on delivering the same number without the price increase is still very high. As you rightly said, our effort is to improve the volume growth, and you've seen that this quarter our volume growth is about 5.5%, which is a significant jump from what we experienced last year. I think we still have some distance to cover to go up to double-digit growth, but we are very hopeful that we should be able to maintain around 6-odd%. As far as the margins are concerned, yes, we are seeing a lot of benefits flowing out of efficiency, a lot of benefits flowing out of our higher contribution coming from SwasthFit. So we continue to stay confident on beating our margins compared to last year as well.
Mr. Manchanda, hi, good morning. Just talk to us about the SwasthFit portfolio. That's been the big driver for you. It's, I think, about a quarter of your business now. How is that? How fast is it ramping up, and a little bit of indication there?
I think it's just playing out the way we thought about a few years back. And if you recall, most of the interviews post-COVID, we talked about what are the new trends that one is seeing. And I think industry is now experiencing a trend where bundle packages are becoming way of life. That's usually the prescription pattern also happening. It's not only we are benefiting out of this. I think most companies are seeing higher contributions coming out of bundle packages. Now, that really has shot up for us from 22% of last year to 25%. It definitely gives us huge operating leverage because we are able to do more tests per visit and servicing costs not being there, and you certainly see the margins kicker there. So to my mind, I think this will continue. It's an industry-wide phenomena. Where does it stop? Let's see how it goes from here. But we are very bullish about this.
Okay. What about Suburban? It's still a little sluggish because it's not even a 10% growth that you've seen in Suburban in this quarter. Margins are at about 14% or so. Can you tell us what is the way forward as far as Suburban is concerned?
There is a slight bit of improvement we are seeing on both on top line as well as margin. Yes, it's still below our expectations. But as I've been saying, there is a bit of a shift from the way business was done before. Right now, we are focusing more direct to consumer. We are trying to focus on home collections and preventive health packages, trying to build franchisee network, because earlier the business was being run through own infrastructure. Now, franchising as a concept brings in a lot of entrepreneurial energy. And we are seeing some bit of shift from business from being run through doctor channel now to direct to consumer. We are very hopeful that probably by end of this year, we'll see better growth rates coming out of Suburban. And it provides a great platform for us to drive growth in Mumbai city especially. So Suburban definitely continues to be our top priority, and we believe it's a great platform for us to build Western India business.
Okay, all right. Give us a sense about the competitive intensity then, sir. Last time around, you were sounding like that's easing off a little bit and the larger players will continue to do well. Has it got even better for a company like yours? Point number one. Point number two, some of these smaller players, that were undercutting the market, suddenly they'll find it difficult to survive. So in that case, you could look at inorganic growth as well.
I think the narrative that's building in the industry is that competitive intensity is slowing down. I think, let me just clarify that the intensity still continues to be the same. It was always very high, and even now also. But I think one change that we have seen in the last sort of a few quarters is that the competition, I would say, for lack of a better word, is become a little healthier. Earlier, it was a lot on pricing. People were thinking that we just drop prices and the volumes will go up. It doesn't really happen in healthcare. I think the trust and quality is very, very important. And most people have realized that these short-term measures of just discounting, very deep discounting, it doesn't really help. I think to my mind, intensity is still there, but it's just become a little healthier on pricing.
Mr. Manchanda, just to get you to the numbers for a quick bit. So for the full year, you were expecting revenue growth to be at least basically 10% plus.
Yeah, so
FY25?
10.4 we did last year. So we've been saying that we'll definitely be better than that.
Better that.
Yeah, so Q1 is already gone 11.3%. So I think overall outlook for the years continues to be the same for us.
Could be closer. Could be better and better as well. I mean,
I think September is a key month for the entire industry. That's where the needle just moves either way. So we'll have to wait it out how September or first half of October goes. Then probably we'll be in a better place, a better position to talk about this.
because of higher testing in that month.
Yeah, so let's just wait it out for Q2. Then we will be in a better position to talk how the full year looks like. But we are confident that it will be definitely around 11-12%.
Okay, well, thanks a lot for that, Mr. Manchanda. Pleasure speaking to you here on CNBC TV18. That's Dr. Lal PathLabs.